Is Bitcoin actually a store of value, or are we just mirroring the NASDAQ? While gold and silver are rallying on pure fear and speculation, Bitcoin is behaving more like a high beta tech stock, riding the coattails of AI revolution. The digital gold narrative is a story told by holders to shape the market, but the data tells a different story. Bitcoin is a cyclical speculative asset tied to US liquidity markets. Everyone talks about the 4-year cycle, but nobody's talking about how BTC cycle is now merging with the AI hype cycle. Think about it, both requires massive computing power, both have a high learning curve and difficult to adjustments. Just like you can't mine all the Bitcoins at once, AI can't be trained overnight. They share the same backbone, infrastructure and energy. If the AI narrative slows down, Bitcoin won't dip, it will crater. There's also the US market, which is hanging by a thread with record-breaking fiscal debt. The entire economy is being propped up by the promise of AI productivity. This makes Bitcoin a double-edged sword. If AI delivers, BTC follows the recovery, but if a bubble pops, we are looking at one of the most brutal depression in global history. We aren't in a store of value market. We are in a liquidity-driven tech cycle. In such scenarios, don't let YouTubers and Twitter influencers created FOMO based on old narratives. If you want to know where BTC is going, stop looking at digital gold charts and start looking at Nvidia earnings and AI adoption rates. We are in a speculative era where narrative changes every year for Bitcoin. My strategy: stay analytical, stay practical, and recognize that we are trading a tech proxy and not an ancient metal like gold and silver. What do I think about Bitcoin? Is the bottom in? Maybe, but based on the data, there is still a room for a deeper flush. If the AI narrative loses steam, what's the computing power, what's the debt? Stay cautious, and I'll see you in the charts. See you later.